Thanks for the introduction. So I'm going to skip the introduction slide. It's pretty much what you just said. And I'm going to talk about, this talk is going to be pretty different from the other talks that you've seen here. I'm not going to say like, oh, we've built this awesome Oracle system, or like we know all about oracles. It's going to be more like, we have a problem and we need your help in terms of oracles, right? So you guys in the room are the oracle experts and we need your help. And we have an awesome use case which is applicable to DeFi. And we know there's a lot of data available out there for DeFi, as we've just heard in the previous talk. And for those of you who might not know what DeFi is, it's basically a smart contract ecosystem which implements financial services, right? And this space is growing a lot. We have a few logos here of some of the biggest projects in DeFi. But as some of you may know, in order to properly navigate through DeFi, or when you navigate through DeFi, you're facing a lot of different risks. So there's many financial risks. And by financial risks, I mean stuff similar what happened to UST, to the Terra stablecoin a few weeks ago. Probably everyone here knows about that. When the stablecoin depegged, it basically caused a spiral, and now it's definitely not equal to $1 anymore. But there's also technical risks in addition to these financial risks. So you need to know that these financial systems are just programs implemented in smart contracts running on the blockchain. And there's nothing magical about them. These programs may contain bugs, and they are subject to hacks, right? So on this slide here, I just have a picture which is from a long time ago when some of you might remember DeFi summer in 2020. Everyone was talking about harvesting and farming and so on. And there was this interesting news article which was saying like, okay, when you're harvesting, you might be subject to pretty big hacks. So this was at the time quite a large hack. Since then, we've seen way more hacks. And you definitely need a lot of technical expertise in order to be able to judge if what you're going to be deploying your funds in is subject to this kind of risk. So as I just mentioned, the number of hacks in DeFi has been growing a lot over the past years. So we, on this chart here, by Chainalysis, we can see that they started back in 2018, let's say, when DeFi was just picking up. There were just a few projects, right? And over the years, like 2019, 2020, you can see this dark blue bar has increased significantly, right? So this basically also came, it's sort of proportional to the amount of DeFi projects that were launched and the total value locked in DeFi. So it's not just like, okay, it stayed the same and just the hacks increased, right? It increased with the popularity of DeFi, but still these kind of hacks are a strong deterrent when it comes to institutional investors, right? So how do we convince institutional investors to join the party when it comes to DeFi? And what we've done is, at Quantstamp, we've served a lot of customers in this space over the years. Like we've started in 2017, we've audited more than 500 projects at this point. We have over 250 customers, and we've secured over 200 billion in digital assets in the projects that we've audited. And over again, these customers of ours have asked us, is there a type of insurance or guarantee that we can buy in order to make sure that we don't get hacked, right? So we know that there's no such thing as 100% security. And we would like to have this sort of safety net, right? In case there's a hack, we should be covered. So what we've done as Quantstamp is that we've partnered up with a leading global insurer and a leading global reinsurer, and we've launched Chainproof, which in itself is a Bermuda entity, It has been licensed in Bermuda quite recently, just last month. We've been awarded the Insurance General Business License, so we can now offer basically cyber insurance for non-custodial smart contracts. And this is sort of a first. The big difference, I think, with respect to any competitors, that we have the backing, the technical backing from Quantstamp to perform all of these technical risk assessments and properly underwrite the risk. We have a lot of institutional customers who are ready to buy hundreds of millions in coverage. And yeah, our projections look pretty good for the next few years. We're currently working on paper policies for DeFi platforms, also NFT projects, and also liquid staking. So where do the oracles come in, right? Like, I've been talking about the intro here for a long time, and then we're at Oracle conference, so where do the oracles come in? And here's where we need your help. So what is covered by this kind of cyber insurance policies for smart contracts? We basically want to ensure anything that we missed during audits. So if we haven't found a vulnerability and a hacker found it and exploited it, that is going to be covered, right? So this is the first point, which is things that are not indicated in the audit report. And another thing that we cover is explicitly things that were fixed. So we often have audits where many of the issues are just acknowledged. Acknowledged means that the team has acknowledged that there's a risk. They know that there's a risk there, but they're not going to fix it, right? So this is, of course, subject to hacks. So here at the bottom, I just have the header of our audit reports. But if you've seen some of these, they're available on our website. They basically indicate how many issues were found, how many were fixed, and how many were acknowledged, right? This is a big misconception in the space where people think that if a project was audited, it means that it's secure. It doesn't mean that. It basically, you need to look in the report to see if they actually fixed the issues that were found. Because a project can just commission an auditing firm like Quantstamp to do an audit. They find, I don't know, 100 issues, which some of them are maybe critical, medium, low, whatever, and they just acknowledged everything and launch. You know, we're not, like at Quantstamp, we cannot really prevent them from launching, right? We're not the gatekeepers of Ethereum, right? There's this nice comic video which I've seen with like the security guard at entrance of a stadium, and he just like taps everyone and is just like, okay, go in. Quantstamp can't do that, right? We're not the gatekeepers. They can launch, they can go that way, right? And just launch, even if we say like, hey, don't launch, this is dangerous, right? It's dangerous for your customers. The only thing we can do is just publish a report and say, if you're going to deposit into this, you should be careful, right? And that's what we do with our reports. The problem is that not many DeFi users actually read the reports. But anyway, these are the kind of things that we look for during our audits, right? You're probably familiar with some of these types of vulnerabilities, such as reentrancy, which was the main vulnerability that led to the DAO exploit, right? There's, of course, classical integer overflows or underflows, which are happening less often now. Rounding errors are something which are more common nowadays. Also, we look for business process or business-specific bugs in those protocols. So we basically read the specification and we try to find the deviations from that specification. And now, given that you know what is covered, right, this would be an input for an oracle, right? So this would be one of the inputs to an oracle. And then here's what is excluded, right? We're not going to be covering things that we don't have any control upon, like things that are specific maybe to the underlying blockchain layer, right? Like 51% attacks on the proof of work chain, or rug pulls, right? We don't have any control whether the owner of the project is just going to use their privileged roles to just rug everyone. And all, like, this is a long list, I'm not going to go through it, but this is another input to the oracle, right? So this is a hard problem, like I said. You have what is covered, what is excluded, right? And then here's what the setup would look like, right? You have, as your first step, you have an application developer or a project which requests an audit, right? The audit is performed, delivered, and at some point, the developers fix everything and there's some audit certificate being issued. If everything is good with the audit certificate, there's going to be an insurance buyer who could be an institutional investor, right? So there could be it could be an investment bank or something like that, which says I'm only going to deposit my funds if there's some kind of insurance I can buy, right? So they're going to come to Chainproof, which is a primary insurer, and ask, okay, give me a quote for this. At this point, Chainproof basically is very strongly linked to Quantstamp since it's like a subsidiary of Quantstamp, and we continuously monitor the risk there. So if there's any changes in the DeFi platform, like with governance proposals or anything, those are continuously monitored and the risk scores are updated. We also have, like I mentioned, partnerships with reinsurers. At the moment, it's one of the biggest reinsurers in the world. And we provide this coverage to a buyer, right? Now, this is the setup. The second point is when a claim comes in, right? So this is exactly the point where the oracle would be used. There's a claim coming in. The insurance buyer just requests a claim from the primary insurer. And at this point in time, we're doing a lot of stuff manually, right? So our oracle is the auditor at the auditing firm, right? So the insurer just says, okay, we should start an investigation to see if this hack is covered by the policy, right? So remember the previous slide with what is covered, what is not covered? This is exactly the investigation that the auditor needs to perform to document whether this is actually something that is legitimate or maybe just it's some kind of fraud case, right? And this is what is currently being done in the traditional insurance business when it comes to cyber insurance, because things are rather complex there, and they don't have sufficient data as we have it in DeFi, right? So in DeFi, everything is logged on-chain, so there is a possibility to automate this whole process, which is now pretty manual. But basically, after this manual investigation is performed, it's recorded in some kind of written report, and based on that report, the insurer decides whether to pay out the claim or not. Let's say the claim is paid, and then the reinsurer refunds the primary insurer, and the primary insurer refunds the insurance buyer. So this is what we would like to have, right? So this is why we're really happy to be here, to be asking all of you folks, which are Oracle experts, do you think you can help us with such an Oracle or starting to automate some of the points that I've listed in the previous slides? Some of the attacks might be more prone to automation than others, right? Like I'm not saying, let me just go back a few slides. I'm not saying that we can fully automate maybe all of these different types of attacks, but even if we automate half of them or a part of them, this is going to be way more efficient and scalable than if we just do everything manually. The good thing with us is that we're focusing on institutional investors which have large policy limits. So we're not expecting to be serving retail customers which come in the hundreds or thousands, right? We want to focus on a few big players which should limit the number of claims that we're getting at the moment. However, in the future, we do see this product being offered to retail. And in order to do that, the only way we can do that is by scaling this with oracles and having this kind of oracle here. We've already started internally architecting how this oracle would look like, what kind of information sources would come into it. And I can just tell you, like, it's very heterogeneous. We have sources like social media. We have chats like Discords, Telegrams. We have on-chain data. We have audit reports. not just from Quantstamp, but maybe from other companies. So there's a lot of different heterogeneous data, on-chain, off-chain data, which would come into such an oracle, and it would need to be processed, aggregated, and there would need to be a sort of decision be made by the oracle. So it's a very complex undertaking from our understanding, and I'm just speaking here because I'm hoping there's someone in the room who thinks like, okay, this is something that we could definitely, like, maybe we have all the data, we can definitely help you guys with. We'd be happy to partner with you. Yeah, so in conclusion, just want to say, like, there's this huge opportunity, which is DeFi, right? But there's a huge risk of hacks. And institutional investors, they need this kind of regulated insurance in order to join the game, right? To deposit in DeFi. But there's this limitation of scalability, right? And Chainproof does have a license to provide this insurance for non-custodial smart contracts, but it has the limitation of this manual claim verification, which doesn't allow it to scale to its potential right now. So we want to automate claims, and this is pretty much an open problem at the moment, and we do believe that oracles are the solution for this. So that's pretty much all from my side. If you have any insights or any ideas how we could solve this problem, please contact me.